let's be okay. All yours, Opubo.
What day?
Let's go to Friday.
Friday. Okay.
We'll go to next 7 days. What date is Friday? Actually,
Friday's the 23rd.
Okay.
There we are. So I filtered down by the countries that I'm looking at. Actually, let me start with this first. My market is GBP, JPY. That's pound sterling and Japanese yen. Obviously, the first things I want to look at is the economic calendar.
Yeah.
For the US, UK, market watch for any news that would affect the financial markets, and any public holidays in the US and the UK. The public holidays for Japan is irrelevant.
Well done.
So if we're looking at the economic calendar, we've got, I'm actually assuming that it's 6 a.m. So,
yes. Well, this is actually why I say you should go to Friday.
Right.
Because you're trading Japan yen.
Mm-hmm.
So if you're trading Japan yen, when will you start trading?
You probably start trading at 12.
Midnight.
12 midnight, yes.
Exactly.
So clearly, I'd want to wait. There's one news of high importance, which is to do with inflation rate, and I'd want to obviously look at the news of medium importance, especially the ones to do with inflation rates, which is this one here. Although that falls on the same time as this.
Yeah.
And then retail sales perhaps is one of those that I might want to look at probably 10 minutes before the actual event. So I might want to kind of add a few notes in my notepad to sort of say that I have a high at 7. Is that 7 o'clock? Isn't it 7 in the morning?
Oh, which one are you looking at? I think it's medium.
No, this one here.
It's medium.
Oh, that's 12:30. Okay. That's 12:30. So if I started at 12:30, then I want to put a note for 12:30 to not trade.
Till 12:30.
Till 12:30, yeah.
Yeah, I must say, I like your system. It's very orderly.
I set this up beforehand, so it's clear.
Yeah, this is very nice. It's actually very nice. I like what you've done.
It's Notepad++,
because
if anyone is curious.
Yeah, because it gives you a very clear picture of what you need to do for the day.
Exactly. Yeah.
That's very nice. Well done.
At 0700, I'm just going to say review market at around about the same time. So
yeah.
Review at 6:50. Okay.
Yeah, very good system.
All right, so that's pretty much the events economic calendar done, and then I can move on to Market Watch.
Oh, wait, you missed the last one there.
Oh, right. Oh, yes, there's. That's actually pretty important, so I don't want to miss that. So that's 12:45. Market unit. Let's have a look.
245.
245. Yes. In the United States, the market manufacturing purchasing managers index measures the performance of the manufacturing sector, and it's derived from a survey of 600 industrial companies. I think for the fact that it's a high important event, I would want.
Oh yeah, once it's labeled high, you have to avoid trading. Yeah.
Yeah. So literally, I could just change all of this and say high at.
Actually, this is a very interesting one. You're going to tell us, Judge, based on this, your economic calendar, when are you going to trade then? So you're trading pound yen, isn't that right?
I'm trading pound yen, correct?
Yeah. So now that you've looked at this economic calendar, based on what you've seen, when are you going to place your first trade of the day?
Well, I come in. I want to have a look at 240 or 230 thereabouts, so I can have a quick review of how it's actually trending, and then I want to place my trade.
230.
230-ish, yes.
So you're going to ignore the Japan report?
Clearly, I'd want to come in and have a look at it. I'm not going to trade before then, so I'll trade from to 2:30.
Okay, let me highlight a few things. Actually, it's a good thing we came to this day.
Mm-hmm.
Like I was saying earlier with Dukbe, that this is where each day in the market tends to be different, and you have to really the lesson now in the life situation is how you apply the knowledge you've gained. So yes, ideally you don't trade before the last report of high importance, but in a case like this, where it's the pound yen, and you have that report coming out at midnight, which is what you tend to find out with Asian markets like this. Now, and like you rightly said, that's inflation rate. That's a report of very high importance. So there's a very high likelihood that that report at midnight will have a significant impact on that currency pair, the pound yen. Mm-hmm. So there could be a considerable movement around midnight when that report comes out. So you will miss it if you don't trade around that time.
Right.
So if you're trading currencies paired with yen, just like the one you've just done now, yes, you will have to have your first attempt at, like you rightly said before, you assess the market about 10 minutes before midnight, place your pending orders just before midnight, and then get ready to trade that market. Yeah. Now, if you lose out on that trade, obviously if you make your money, then that's the end. If you lose out on that trade, then you wait till 2:45 before you have another attempt at the market.
Right.
But yes, you can't ignore that report at midnight.
Good. Then the next thing I'd want to do is obviously just have a quick scan of the next couple of days. But since this is Friday, is it worth having a look at Monday?
No.
If it was available.
No, like you said, if it was on Monday, so usually on Monday it's good to scan the whole week. Yes, definitely. Okay. But yeah, like I say, Friday is the last day of the trading week, so you don't need to check the next week. No.
Okay. In terms of Market Watch, which would be the next thing I'd look at, I think I can skip that because Duper has already gone through that.
Yes. Yeah, but the good thing is you mentioned that you will look at it, so that's good.
Yes. Next thing is holidays. Clearly, there are no public holidays in the US and the UK, so we can skip that and go straight to the platform.
Yep.
I've already set up my workbench, which has GBP, JPY as the currency.
What's that? Is that the volume at the bottom of your chart?
It's just the volume. Yes, it's just for me. It's nothing. No indication of anything else. So it is the volume.
You like it there?
Yes.
Why?
I just want to see what particular times peaks in terms of trades and how much it seems at this point in time, it's around 2 p.m. That you get a lot of trades. So that I can come back. If I was analyzing this, clearly I'd want to see a trend and be able to review the market at this specific point in time going forward.
Okay. Volume can be very deceptive when you're trading currencies.
Right.
Okay, actually, let me see if you can figure out why.
Well, I mean, the volume itself is a buy and sell, right? It's a buy and sell in combination. It's not a buy or a sell. Isn't that right?
Yes, but why is volume not relevant? Why would you think volume is not relevant when you're trading currencies?
No idea. It's probably the number of pips. It's probably not to do with the actual value itself. Or is it just a number of trades? Is that what it shows?
Okay, volume in itself just tells you exactly what it says, volume. Mm-hmm. So volume is giving you an indication of how much activity is happening in the market.
Yeah.
Now, when it comes to trading stocks, volume is very important because sometimes there might not be much activity in a stock and the volume is very low. But with currency, because you have about $2 trillion traded every day, volume is taken for granted. Because with that amount of money being traded every day, the amount of money traded in the commodities market, I think I went through this in the first session on the basics of trading. The amount of volume in the commodities market, if you combine the commodities market and the stock market and the fixed income, if you combine those three markets together, the total volume of those markets is still a fraction of the volume of the currency market.
Yeah.
So the currency market is huge. You know, when you have almost $2 trillion traded every day, that is a gigantic volume. So this is where volume as an indicator is not very helpful with currency trading, because volume is taken for granted. It's a huge volume.
Yeah.
But because of the stock market, there isn't much volume. It's a small market in comparison. There isn't much volume. Mm-hmm. And especially when you're now looking at individual stocks, so some stocks, the volume is almost flat, which will discourage you from trading it because there's not much volume. So volume is helpful when you're trading individual stocks, but for currencies, it doesn't give you, no, because of the amount of volume being traded of $2 trillion, it doesn't give you really any reliable information.
Okay. All right, so going back to the IG platform, again, workbench setup, GBP, JPY as my currency pair.
Yep.
I'll just go back to the notes just to run through what I'm using here.
Yep.
So I'm using, obviously counting the pips, second digit from a decimal point, which is what
was well done.
Last lecture. Chart type is candlesticks, everyone else. Time frame of 5 minutes, M5. Indicators I'll be using as a pivot point strategy, moving averages as a supplementary indicator. And if there's an opportunity to use market support and market resistance,
well done.
I'll use that.
You're very orderly. I like this.
The contract size 0.05, which is 50p per pip, and risk reward ratio, of course, sticking to 1 to 3. And then I'll compete.
Oh, actually, yeah. I think while you're on this, you might as well add that to your contract size. Mm-hmm. Since you're very orderly, let me just get you to add it. But you can just put there in bracket that for a live account, a volume of 1 is $1 per pip. So you'll be risking 0.5 when you're doing a live account. So if you open a IG live, especially spread bet, it would be. Is this IG, by the way? I just assumed.
What is
this platform?
Yes. What I'm
okay.
Using
yeah. Okay.
Yeah.
All right. So with a live volume of 1 is £1 per pip.
Yep.
So if you're doing 50p, to be 0.5.
Yep.
Okay.
Good. And then with the buy and sell values, I'll fill that in as I go along. And I've obviously put a note there.
Okay.
On my trades at 6 p.m. So looking at the actual, what I've set up, obviously we've got the moving averages in blue and the pivot points is preset. There we go. Then what I want to do is look at the trend, and clearly we can see here that this is a sideways trend. Actually at this point, let's see if we've got 1, 2, but we don't have 2 high lows. So that looks sideways to me.
Lower lows.
Two lower lows. Yeah. So that looks sideways to me.
Yeah.
Again, pretty much up until this point, I believe that's a sideways trend.
Yeah.
With any peaks, it does an upward trend here, a downward trend. If you look again, 1, we got 1, 2, and then there's 3, 4.
Yeah, so it's making lower lows. I mean, lower highs and lower lows.
Exactly. This, I wouldn't say, would you actually say this is an upward trend? I think it's just peaked.
Exactly. Well done.
Yeah.
Exactly. I'm happy you said that, because like I said, you're doing very well, Opubo, because like I said, you just described what you see. All you just see just went up and made a peak, but did not make a higher high and a higher low.
Exactly.
Yeah, so well done.
And then up until this point, up until this particular candlestick here, it's done a downward trend, but then it's gone sideways from here onward. So what I'd want to do is pick the highest point, the upper.
Oh no! Oh no!
Does that look sideways, or does that look like it's going down?
No. I think go back to the highest peak where you mentioned before.
This one.
the recent, no, all the way to the top.
This one. Yeah.
There, yeah. So if you look at that trend slowly, okay, from that peak, where's the next lowest point? Yeah, good. And where's the next highest point?
Yeah.
Good. Is that high point lower than the previous one?
It is.
Good. So that's a lower low.
Yeah.
Sorry, a lower high. That's a lower high.
That's a downward trend.
Exactly. But if you look at that high point there too.
This one, yeah.
No. The one you just, yes. One, yeah. So even from there, you see where's the next low?
This one here.
Good. Where's the next high?
That's probably this one.
You can probably drag it to the other one there, but it's still lower than the previous one.
Yeah.
Yeah, exactly. So it's still a lower high.
Okay. All right.
So it's still trending down.
Still turning downwards.
Yeah, exactly.
Okay.
So you can see from that peak you showed us before.
Yeah.
All the way at the top. So it's really been making lower lows and lower highs up until the current time.
Yeah.
So yes, so you can see that is a clear downward trend.
Okay.
So basically, okay, what I'm trying to say really is that now that you've established a clear trend, from that peak, you can now ignore the previous trend from that peak.
Right.
And now concentrate on this new trend.
I see.
Actually, let me highlight that for everybody, because that's the thing with looking at trends. Once one trend starts and stops, you can ignore it. So if the market is trending sideways, so long as it keeps trending sideways, you just keep at it. Now, once that sideways trend is broken, either to go up or go down, you can ignore that sideways trend and focus on the new trend.
Right.
If that new trend is trending up and making higher highs, higher lows, you ignore what was coming before. Once that uptrend stops and another trend starts, you follow that new trend. So that's what's happened in this case. Now, in this case, where you can see that previous peak, and then since that previous peak, the market has been making lower lows and lower highs, you can now ignore everything before it.
So are you then saying that would you not still mark out the upper and lower limits?
Exactly. You're going to ignore all that. That's what, yes, that's exactly what I'm saying. Because the reason why is because you've now established clearly that the market currently is trending down.
Yeah.
So now that it's trending down, there's nothing really to mark out. The only thing you're marking out is when it's trending sideways.
Okay.
So it's not trending sideways now. It's clearly trending down, making lower lows, lower highs. So all you're just doing now is following this particular trend.
Right. Okay. So the next step, obviously, is to place my buy and sell trades. Obviously, it's going to be 2 pips above R1 and 2 pips.
Why R1?
Because that's the next point from which I can trade. Actually, no, it's the pivot point, actually. So it'd be 2 pips above the pivot points, because that's where the market is. And we're looking for the next line above the market. So that will be the pivot point line itself.
Good. But why is that a good place to buy? Give me another reason.
I can't see any other reason why. I mean, using the pivot point strategy, we're looking for the next resistance.
You're correct. Okay, what if the moving average was still above the pivot point? Would you use it?
No.
Exactly. So that's what I want you to say.
Okay, that's the moving average. Okay.
It's because the moving average is now below the pivot point.
Yep.
Now you can use it. If the moving average hadn't crossed the pivot point, you can't use it.
Sure.
But now that it has crossed the pivot point, you now know the market will break the moving average before it gets to the pivot point. So now you can use it to buy. Okay. And that's why you use the moving average as an indicator with your pivot point to complement your pivot point strategy, because it helps you. So yes, that's what I wanted you to say, that because the moving average is now below the pivot point, you can now buy above the pivot point. Well done.
All right. So in terms of the buy trade, I'll be looking at 2 pips above the actual pivot point, and that's 136.63. Because if you round up, that's 136.62 actually.
Yep.
Points at 136.64.
Well done.
I'm actually just going to fill this in before I do anything else.
Yep. Which is again, I like that because I always tell people when it comes to doing your orders, take your time. Especially when you now start using real money, you don't want to be losing money on technical errors.
Exactly. All right, so I've filled the actual values in. That's 20 points below, minus 20 points for the stop loss, and plus for the profit limit for my buy trade. And if I go to the buy trade, let me just increase that.
I really like your notepad.
I'll send the details afterwards.
Yeah, it really helps beginners to be very orderly.
I've obviously set this up so that it automatically shows my symbol. So the currency pair I'm obviously trading has already appeared.
Yep.
JPY. I'd want to change the type to pending
volume.
Order. I'll do the volume in a minute, and then the type I'd set that to buy stop, and obviously the volume is 0.05. Again, typically I'll tick this and set this to 18.00, but I wouldn't do that now.
Yeah.
For the time we're in.
We've gone past there.
We've gone past that time. So I'm just going to take that as my buy price.
Yep.
Put that in there. And the stop loss.
Well done.
And just to avoid mistakes, I prefer copying and pasting. After it's been typed in. And that should.
And I like this myself. I like what you're doing.
And there we are. That's placed.
There you go. And the sell?
And the sell. Okay, so the sell order will be below two pips below S1.
Yep.
Which is 136 if we round up.
Yep.
So 136.02. And that's the 2 pips minus. Actually, no, that's 136. That's 136 is 135. 0.98.
What? You lost me there.
It's it's below. So it's 135, 136, and
yeah.
135.98. Yes, yeah.
Yes, you're right. Yes, you're right. 136 minus 2. Yes,
minus
right.
2. Yeah, so 135.98.
Yeah, correct.
That is 135, 136.18 plus 20, and minus 60 is 135.38. So again, just making sure I've got the currency pair, GBP, JPY. The volume is already set from the previous transaction. Pending order, set that to sell stop. And then I can go ahead and copy paste the values that I've already calculated. And that's 135.98. Put that in there. Sell stop.
It's a good thing we're recording this because at least everyone can see what you've done. And like I said, this is a very good way to get things organized in a very nice, especially when it comes to placing your orders.
Yep.
So we'll call it the Opubo method. I have to patent it. We have to patent it. But yeah, well done. And I think it makes it easy now for you because you did it in a very orderly fashion.
Yeah.
And you had everything typed out and all the, again, it goes back to that's the whole essence of trading. Once you have a plan, once you know what you're going to do step by step, and you also made it easier for yourself, which I really love, Opubo, the fact that you already had everything typed out. So it's just you going through everything step by step on your notepad next to your platform really makes life much easy.
Yeah.
So yeah, well done. So yes, I will encourage everyone to adopt the Opubo method and give credit to Opubo if you adopt it. Thank you very much, Opubo. Well done.
Cheers.